This is a video about a simple but powerful market structure tool called Trend Range Detector by Zeiierman. If you really watch markets, you know the giant vertical moves almost never come from nowhere. They're usually born out of quiet, sideways stretches where price compresses like a coiled spring. This indicator is built to find that calm before the storm by marking true consolidation zones and then flagging the moment price actually breaks out of them. If you find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to the platform I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, click on Indicators, type Trend Range Detector by Zeiierman, and add it to your chart. You'll immediately see clean boxes draw around areas where price has been stable, and you'll notice those boxes change color the moment price escapes the range. Ladies and gentlemen, here's the plain English idea. The script keeps price on a short leash around a dynamic center line. If closes stay close enough to that center while volatility stays contained, a blue box appears. That's your stable range. The second price pushes beyond the boundaries with conviction, the box flips color in real time. Green on an upside break, red on a downside break. It's a visual nudge that the market may be shifting from compression to expansion. Now let's walk through what shows up on your screen and how the script decides to draw it. The tool wraps stable price zones with boxes and colors them in real time so you can read the state at a glance. Blue means consolidation, the calm. If price punches out above the top boundary, that same box flips to green for a bullish breakout. If price slips below the bottom boundary, it turns red for a bearish breakdown. Keep lines on in the Style tab if you want the range edges outlined. Those short horizontals make the boundaries obvious even when candles get busy. The color flip happens right on the break when highlight box breaks is enabled, so your eye catches the shift from compression to expansion without babysitting every tick. Under the hood, the box only appears after price proves it's truly close enough to balance. A distance filter checks that recent closes stay near a dynamic center line, while a volatility envelope, built from a deliberately slow ATR 2000 and scaled by your range width multiplier, sets how wide that safe zone is allowed to be. Only when both conditions hold for at least the minimum range length bars does the script print the box. And that center line isn't a plain moving average. It's a speed-weighted average that gives louder votes to bars with real movement and mutes tiny indecisive candles. The result is a box that reflects genuine equilibrium, follows momentum when it matters, and ignores random noise. Blue for the coil, green for expansion up, red for expansion down, step by step across the chart. Now let's add it properly and tune a couple settings. Open the settings window, and under inputs, you'll see minimum range length, range width multiplier, and highlight box breaks. Minimum range length is how many candles must meet the stability test before a range counts. If you push this higher, you'll get fewer but more meaningful boxes. If you lower it, the detector will react faster. Range width multiplier controls how wide the volatility envelope is relative to ATR 2000. A smaller number tightens the box and catches short consolidations. A bigger number makes boxes wider and filters more noise for swing traders. Highlight box breaks simply turns on the instant color flip on breakout so you don't miss the transition. In the Style tab, Boxes shows or hides the range boxes themselves, and Lines shows or hides the range boundaries if you want a cleaner overlay. Click OK when you're done. Alright, back to the chart, here's how we can use it. First, use the blue boxes to read the market's rhythm. When a fresh blue box forms after a strong move, I'm on alert. That's the market catching its breath. Inside the box, mean reversion trades back toward the center line can make sense if that's your style, but the real edge for many traders is anticipation. I'll set alerts just outside the box and prepare for the first clean break. When the box flips green on an upside escape or red on a downside escape, that's your structural tell that the state changed. It's not a standalone entry, so pair it with your filters, volume expansion, a momentum push, or your trend tool to separate real runs from head fakes. Green box plus strong volume is a different story than green with dead volume. Same idea for red. If you like to customize, here's a quick way to think about the inputs. A shorter minimum range length and a tighter range width multiplier will surface quick, narrow boxes that are great for scalps but more prone to churn. A longer minimum range length and a larger range width multiplier will favor slow, well-built bases that often precede multi-session moves. If you want the overlay extra clean, keep boxes on and lines on. If your chart is busy, try hiding lines so only the filled boxes show. In summary, Trend Range Detector blends a long-term volatility envelope with a speed-weighted center line to draw stable zones and highlight the exact moment the market breaks free. Blue marks the calm, green and red mark the storm. Use the boxes to frame your plan, then let your volume, momentum, or higher timeframe context confirm the trigger before you commit. It's open source, which means you can read the code and understand exactly how it works. This is not financial advice. Everything here is educational, and the indicator alone is not a complete strategy. Add your own confluence, price action, higher timeframe structure, key levels, volume, and risk management, and make your own decisions. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching.